Hi, this is Sheldon here from the Currency Advisory Desk. Well, some of the major events which were supposed to lend some direction to financial markets have fizzled out, leaving the world with even more uncertainty than was prevailing before. Now, the RBI surprised everybody yesterday by not cutting rates. Now, considering the ever increasing inflation, on the face of it, this appears to be the right move that has been taken by RBI. However, we saw the rupee trading in its 55.80 to 56.10 band post this particular event. And the market seems directionless, and we expect the rupee to continue to trading in this particular band. And the US dollar index is trading at around 82.08, which is down by minus 0.19%. You see, with the Greek political turmoil coming to an end, at least that's what we foresee, the world is now glued towards the FOMC meeting which is happening. Now, the FOMC outcome, the expectations of further easing seem to be setting in. However, we do not expect any indications of further injections of liquidity by the Fed tomorrow, because tomorrow is the last day for the meeting. In fact, we expect the Fed to hold on to its firing power till the end, just before the US elections, which are due to take place in November or December this year end. Now, risk of contagion in Europe still persists. The results of the Greek election is just a temporary halt to the falling euro. We expect the euro to fall further from here. In rupee terms also, we expect the euro to trade lower, and hence we advise a short position in the euro rupee pair. Greece is expected to, as per the models that are available, Greece is expected to run out of money in a month's time. This will put further pressure on the European officials for further lending. The ECB and whatever the stability mechanisms that they have, the EFSF, this will put further pressure on them, since Greece is still part of the euro region post yesterday's elections. This, coupled with the ever increasing Spanish and Italian bond yields, it's like a time bomb which is ticking away to the euro's destruction. Major important data to observe for today, we have the UK's CPI, which is your consumer price index, and the retail price index data to be released today. Now, this will give us some more insight into the British consumer spending behavior. As you know that every economy, the spending behavior is like an indication for growth or degrowth. If we see that there is no change expected in these figures, but however, if we see that there is an increase, we will probably see the pound moving higher as compared to the dollar. Now, however, the pound is showing a tendency in the European region to act as a safe haven currency. Now, if we compare, see, with the extreme volatility in the euro and other major European countries such as Switzerland, which is moving the Swiss currency that is there, the government has already intervened and they have said that they are going to maintain the rate of exchange. So they are moving to, it's more of a managed float that is there. The pound seems to be the only currency in that entire block which is left to shore up during turbulence, during periods of turbulence. Now, we recommend a buy in the pound rupee pair due to this particular factor, because compared to the euro, the Swiss franc, whatever is there, the Canadian dollar also, the pound is showing some tendencies of a safe haven currency at the moment. However, this has nothing to do with UK's fundamental or structural economic conditions that are existing. Now, moving to the Japanese yen, the yen is witnessing huge safe haven buying and is seen at trading at around 78.95 levels against the dollar. In fact, the Japanese yen seems to be heading towards its highest level since this end of Second World War, which was around 76.25 against the dollar. Now, we are bullish on the yen and advise our clients to go ahead and buy it against the rupee. The ongoing Group 20 chief meetings, which is going on right now in Mexico, focus their response on Europe's financial crisis on stabilizing the region's banks. This thing is raising more pressure on Germany's Chancellor Angela Merkel to expand rescue measures, as contagion engulfed Spain is also part of this particular entire discussion. And this contagion is spreading. Spain has already been engulfed. We are seeing Italy next. Probably we could have something like France coming up next. Now, China has also pledged $43 billion for the IMF firewall. We have recent news coming out wherein they have said that all the BRICS country leaders would be setting up a fund wherein they would be putting up money based on their forex reserves to help any further downfall, assist the downfall that is there, to prevent it from happening. Now, however, all these measures, as per us, we seem to be just a mere political gimmick. We don't see anything that is actually tackling the practical problems that are existing in the euro region. Now, moving for the technicals for today, well, the dollar in the spot market is trading at around 55.40. We see a support at around 55.40, and we see a resistance for the dollar at around 56.24. For the euro, in the spot we see a support of around 70.05, and we see a resistance at around 71.13. The trend for the euro is bearish, and for yen we see a support in the spot at around 70.50 and a resistance at around 71.21. And for the pound, the trend is bullish, and we see a support at around 87.20 on the downside and the resistance of around 88.40 on the upside. Well, that's it for today. Thank you.